Good morning, everyone. Good Friday, everyone. We're all looking forward to the weekend. But before we get there, we're going to do one more show this week, a Tech Leaders Unplugged show. And today we are getting unplugged with our guest, who is Kevin Mohan Nair. He runs engineering leadership at Chippercash. And we're going to be talking about a very interesting subject, digital currencies, emerging markets. But I'm going to let him do the talking. For now, I just want to welcome Kevin. Kevin, welcome to the show. It's a pleasure to have you here. So
Yeah,
thank
yeah,
you.
yeah.
And of
Thanks.
course,
Pleasure to
Wade,
be
thank
here.
you as ever for graciously co-hosting this and being here, part of this. That being said, Kevin, tell us a little bit. Let's start with you, Kevin. Tell us a little bit about you. Your background, your experience, anything you want to say about yourself, please.
Yeah, definitely. And again, I'm really happy to be here. Thank you, Wade and Carlos. So I'm the head of engineering for crypto and investments at Chippercash. It's a Series C scale up out of San Francisco. I've been in the fintech space for maybe the last 15 years, whether it's e-commerce, blockchain payments, traditional payroll. So I've been kind of in this space for a little bit. And previously worked at NASA, worked at a nuclear reactor. So built like a satellite, launched it in space, which is really cool. Just like back in 2009, back in my interning kind of days. So pretty cool there. Yeah, my experience or my education actually is from Georgia Tech. So I studied electrical and computer engineering there. And yeah, go Jackets. And yeah, I'm also the founder of Favor AI. So this is just a platform that I've been building lately, getting more into AI. Obviously ChatGPT kind of blew up recently, and I've been kind of following that more closely in the past year. And yeah, as far as my personal life, just enjoyed spending time with family, traveling, and of course, gaming and typical nerd things. So a little bit about me.
Yeah, thank you so much, Kevin. Yeah, you mentioned gaming. Probably 99% of the people that I know in tech usually like gaming, especially younger folks. But yeah, it's like a trait of engineers, especially. All right, so let's talk about. Let's move on to the topic. The topic that you chose for today is stable digital currencies in emerging markets, right? So you claim that it's like the hottest technology trend you thought was over, right? So let's hear it. Like, why did you feel that it was relevant for today's day and age? Let's start with that, please.
Yeah, absolutely. So crypto, right? We all know crypto had its really big boom in 2017, and then 2021, everyone's like, I'm going to buy Bitcoin, whatever, watch it go up, sell it, make a profit, right? These days, people are like, crypto's kind of dead. NFTs were, a really big thing a couple years ago, and people hate NFTs now, right? They're like, oh my gosh, like NFTs are just, JPEGs I can copy and paste, and now it's mine, right? So what's the point of NFTs? There's actually so much more going on in the space. NFTs are being used with basically metadata, right? Which you can inject basically different piece of metadata over time. So you can actually have like an NFT that shows you the weather, for instance. So there's things like that, that are happening in crypto and just being developed even now. There's so much progress, right? It's kind of crazy. So that's more on the NFT side. What I'm going to talk to you about today is more on the kind of payment side of things. There are some really interesting phenomena that are going on right now. In the US, we don't really get to see all of this, but there are a lot of things happening in the world, that are, sort of a storm is brewing kind of deal, right? It's kind of interesting. So I do have a couple of questions for you, right? So one quick question is, what kind of savings rate are you guys getting? Are you getting that sweet 5%? You're getting 4 point something?
Well, obviously, it depends on whether you're talking about a savings account or a CD or those kind of things. Obviously, those are reflective of the Fed rates and those kind of things. But obviously, you're lucky if you can get 3% on it. Like that. Yeah.
Absolutely. And sorry, go ahead, Carlos.
No, I was just gonna, totally agree with Wade. I consider myself lucky if I get like anywhere between 4 to 5%.
Exactly. Inflation, right?
Yeah.
So So that number, yeah, it's pretty good, 4 to 5%. Compared to maybe 5 years ago, that sounds like an amazing number. But people in other countries are effectively getting 20% right now. There are people in emerging markets, let's say Nigeria, Vietnam, other countries, especially with high inflation, right? There are people just buying into USDC. So USDC is a stable coin backed by the US dollar, and it's offered by a company called Circle. So Circle is considered very secure in the sense that you have to really send $1 from a bank account to really mint, basically to get 1 USDC on crypto from them. That around the world, it's kind of an exclusive. It used to be sort of very exclusive to get USDC. There are other currencies out there like Tether, other less regulated, less kind of transparent currencies that are out there, and people can get a hold of those more easily around the world. But USDC is now becoming more accessible to people around the world. So what are people doing? Let's say in Nigeria, your currency is devaluing by 20% roughly. Just by buying USDC at the beginning of the year and holding it, let's say to the end of the year, your dollar rate might have gone from 900 or 700 naira per dollar to 900. Just by holding that, you make a difference of 200 naira per dollar, right? So you're basically protecting your assets by holding USDC, which is a really interesting trend. So people all around the world in different currencies, or with national currencies, are holding USDC, and it's a really interesting phenomenon because you're seeing 20%, 10% savings rates just based off of holding. It's much better than what we have here in as a savings product. And the question is, what happens? There are things like BRICS, Brazil, Russia, India, China, South Africa. They're all coming together and they're trying to band together. And essentially, let's say they build a currency and some kind of issuer like Circle comes along and they say, let's have a BRICS dollar, but it's not gonna be a dollar, it's gonna be a BRICS currency, right? Let's just say that it's a competing kind of world in the future, right? Where people can choose to invest in the BRICS dollar or the US dollar via, let's say crypto, right? Or something else. It's really interesting to see a bimodal kind of world where you have the dollar and a competing very powerful currency as well. It could be an eventual catalyst for war, even. We don't know in the future, right? Let's say the USD was backed into a court or something like that. So very interesting phenomenon happening. But again, they're also contradictory because while all these countries under BRICS and all the minor countries under BRICS as well is trying to band together under their own currency, the same residents of those countries are also investing and buying USDC and holding that. So what you have is a very interesting situation. So it may look like a world where people invest and hold both USDC, but also a BRICS kind of currency in the future to kind of hedge, their position essentially of the world to keep their, value of their assets, obviously. So we're in this really interesting time. And today's actually a very special day. I'm just curious if either of you know the significance of today.
Well, what you're talking about is really the Forex exchanges have been around for a long time, but those have been really through somewhat sophisticated investment. You have to have access to the platforms. You obviously have to be able to put your money into those Forex accounts, and that's obviously not a exchange that the average person in Nigeria is going to have access to. Maybe can't even access it for country legal issues, because they don't want currency flowing. So what I'm seeing here is that you're just lowering the entry to leverage the concept of current, foreign exchange and currency swapping, where you buy a currency and then, like you said, just holding it. Most currency exchange, you might even hold it part of a day. What you're talking about is really hedging inflation against a currency that is, stable against inflation, and it's not really the same thing as interest within your currency, which is what we would do a U.S. dollar in a savings account. It's really hedging against inflation, which is obviously a big concern in Argentina and many countries. And if you can lower the entry point, is that kind of what you're saying here? The context, it's taking forex models but applying it to a much easier way for people to do that without getting into formal forex exchanges.
Exactly. I mean, people, at the end of the day, it's holding value in your assets, right? And yeah, in the US, we just have savings accounts. The US dollar is basically the strongest currency, which is why we have, as US citizens or people in the US, we can hold that, but only get a savings rate. But people in other countries, yeah, they're getting this benefit of the dollar strength, right? Just by holding USDC, which is a crypto, right? And one thing that's really interesting about crypto is, and even just like, look at social media, look at other things, technology only speeds up the eventual behaviors of people that, things that are already there in place, and, human connections, things like that, just using that parallel. It's the same idea with crypto. The kind of movements of money that have happened, over wires, whatever, for a long period of time, they are just facilitated and faster and accessible to a retail kind of investor or person who's dabbling in this just via crypto, right? So you're seeing the same movements, people hedging their money. So it's pretty interesting to see that, they're getting those benefits. Meanwhile, their countries potentially are going to join BRICS, right? So it's kind of a question of, like you said, there's regulation. So people in Nigeria, they can't really use crypto today, right? They're not really supposed to use crypto per the government. The CBN has come out with regulation back in 2021 saying, crypto is essentially banned for, any fintech platform to really offer in Nigeria. However, Nigeria is, I think, the second or first most by crypto adoption in 2022. So they're growing very, very quickly in their crypto usage. And one of the big reasons is the people need it. So one thing we see is that when a country has high inflation, like you mentioned, Argentina, Zimbabwe is a huge example of this, right? They have hyperinflation. These countries, it's more like a necessity that they have something to hedge their value, right? More than other countries where it's kind of like a convenience, right? And so it's really interesting to see the trend, right? And just from my perspective, right, as someone, Chipper has something like 5 million users, and we see a lot of activity, right? As an engineer at my core, I do a lot of queries to see how money is moving on the platform. And one thing I've noticed is there's a lot of movement where people simply buy USDC and just hold it for a long period of time, right? Like a very interesting pattern. So I can see what a cross section of the whole population of the world, 1 million, is doing, and it's very consistent, right? So it's really interesting to see this kind of thing. So from my perspective, I wonder where this is going to go. Let's say in 5-10 years, you're going to see a world where maybe there's a lot of USDC or crypto. Maybe it's something totally like CBDCs. The Boston Fed is working on basically US dollar coin. So it's going to be really interesting how that plays out. But also BRICS, we know that these countries, they have a lower, I guess, kind of barrier in a sense, because they're more we need a new currency. So you'll see Nigeria has come out with the e-Naira. There are other currencies out there that are sort of these government currencies, digital currencies. And, so maybe that they come out with something first, and then, as that gains strength over time, it's going to be interesting to see how the CBDCs around the world play out against something like a BRICS currency. But yeah, just going back to the point about, BRICS and the possibility of, war or something, right? At some point, if you have two very powerful currencies in the world, there are many things that could happen, right? No one knows the future. I don't, pretend to either, but, it could be that if the US dollar loses a lot of its value because, the USD is strong, it's used for trading, buying goods across different, countries. It's really used to buy, exports from other countries, things like that as well. And it retains its value. But what's interesting is if BRICS, has this currency that, oil, everything else is baked into it, a strong independent asset, what's going to happen when, the U.S. wants to take their payment on, some kind of interest-bearing kind of loan to a country, something like that, right? With the country just kind of, they can't offer the U.S. BRICS currency or anything, right? Not in the way that we see it right now. So it's going to be very interesting to see what happens there. But lastly, going back to the point that I was mentioning earlier, right? Today's a very interesting day. So September 15th, 2008 was the day that the Lehman Brothers filed for bankruptcy. So this was the start of the whole, financial crisis of 2008. I was a senior in high school in 2008, and I was, just coming into the job, the workforce, and I was like, wow, this is a really tough time. So you can imagine the kind of significance, right? Today, the problems are similar, but they're completely different in a different. We're looking at, not necessarily the U.S. defaulting, but the world is in this kind of much different state. So it's a really interesting kind of concoction of things that are going on right now. But yeah, I mean, I'll take a pause there and let you ask me anything.
Carlos, looks like there's a question from the audience. Did you want to bring that up?
Yeah, there's a question from the audience. There's a comment from the audience. So, and the comment comes from a viewer. His name is Eduardo Montes, and he says, diversifying one's portfolio by embracing the adoption of digital currencies like BTC, which is, I'm assuming it's Bitcoin, right? Or USDC, or or BRICS, is a prudent strategy. He says it's intriguing to consider adding BTC to one's holdings, especially with the potential approval of ETFs in the horizon. So that's what he says. Thank you, Eduardo, for your contribution. What are your thoughts on this particular comment?
Yeah, absolutely. So the Grayscale Bitcoin ETF was just approved, essentially, right? So we're already in a world where we're getting approvals for ETFs for crypto, which is awesome. Yeah, I mean, in any investment portfolio, you want to have a mixture of assets, right? And you want to diversify. Bitcoin is a very strong, if you want to go purely decentralized, Circle, USDC, it's a company, right? It's centralized in a sense. But Bitcoin is not, right? So if you want to have Bitcoin, let's say BRICS, USDC, or kind of US dollar coin, that's a very good mixture as far as a very long-term inflation hedge type of mixture for your portfolio. Sorry.
Thank you.
All right. Well, I have a question. The Chipper Cash, I noticed that it has a lot of African involvement. Do you see that it is primarily a savings model, or is it they actually using it to buy goods and more of a utility model where they're actually purchasing through that? That's always been, to me, since I saw Bitcoin in the beginning, was it a means of purchasing and movement of value through digital currency to property and other things. Are you seeing that still being a major way of the use of these tools?
Yeah. So one thing about a depreciating asset in general. So the Naira, it went from, like let's say 400 Naira per dollar, like back in 2021. Now it's sitting at around 930 Naira per US dollar, right? So it's gone basically, it's halved in value, essentially, in purchasing power. So yeah, I mean, it's interesting. And sorry, can you repeat the last part of that? I think there's something I want to comment on.
Yeah, so the question was really about, we've been talking a lot about people buying and holding these currencies, but I've always been more interested in them as a means of actually transacting goods and purchasing food products or other kinds of things, and really it becoming less dependent on physical paper currencies and stuff. And as we move that direction, the government's impacts on their currencies, which most currencies are affected by government actions, not the people. And so when your value of your local currency changes, it's usually an action of borrowing from the government or something that has nothing to do with the person. So by moving away from the government influences of currencies, that's really been the push for digital currencies, was to take these Federal Reserves and all these reserve banks out of the currency and try to stabilize it that way. And I think all the speculative models around BTC and stuff have really kind of damaged that true, I think, approach that was there for to to remove the influences of reserve banks. And so tell me a little bit about what you're seeing there, because we really haven't been able to get Bitcoin to be a means of trading currency versus, like you said, it's speculation, buy and hold, and that's really been how it's been used, which is crazy. It's just an entry on a blockchain, right? And it holds no intrinsic value in and of itself, other than the scarcity aspect of it.
Yeah, absolutely. I mean, Bitcoin, right? What is the value of? I mean, this is going back to the ethos of kind of Bitcoin, right? Which is your keys is your money, right? So people can't take it from you. It's decentralized. I mean, at least not, with forcibly, right? They would have to take it from you in some way. But even then, the idea of Bitcoin, right, is that the whole purpose of it is to, at least originally, was for it to be like a utility. You spend it, you use it, things like that. Over time, it became more of an investment tool because people saw, it was essentially, you can imagine a stock. Something goes up in value, you buy, you sell, you make a profit. As the price goes down, you see that people utilize it more, which is an interesting trend. So going back to your question about USDC, people hold it. And in Nigeria, like I mentioned, the 410 versus 930 rate, people are they're very sensitive to this rate. So if they say, oh, yesterday was 920, today's 930, I'm not going to get the best rate, maybe I'll wait till tomorrow. They're still seeing it quite a bit as like an investment kind of product, because they, at least what we're seeing is that they're seeing it that way, because they sometimes transact it, but for the most part, they're holding it because that's the more valuable part of it for them right now. I think if the rate, if the Naira got stable again, we'll probably see that people start spending their USDC holdings a little bit more. Also, USDC is accepted in more and more places every day. So, you may be able to one day buy, Netflix, your couple months of whatever subscription with that USDC. So, so the ability to spend it is really important as well. But at the moment, it's more of like a holding pattern, right? Because you want to invest it, keep it, and then spend it versus holding your Naira, which probably has halved in value since then.
Yeah, it's kind of interesting that, I think the beginnings of Bitcoin was really about the power of the Federal Reserve on the US dollar. And here now we're pegging a currency against the very thing that, the digital currencies was to try to differentiate and separate from. So we're using a real currency as a peg to against the foreign currency. And it's just an interesting angle of just using this as an inflation tactic versus a speculative, it's very different than the way it's used here in the US, obviously, because we have the currency is available in our day-to-day lives, obviously. Now, should that change, obviously, and the US dollar, which the BRICS and all these other challenges of, moving away from the US dollar as the, world's currency for oil in particular, we may see that, that dependency on a Bitcoin or some other digital currency model. But I really, I think I think there still is a day when this will be a means of transacting currency against goods like we use regular paper currency for, and that's the day. That's always been the future that I look at. As much as the speculation takes the news, I think that the value of trading with these digital currencies is the true utility of the future long term. So I think we're at the top of the hour, Carlos.
Yes, Wade. Unfortunately, we're coming up on time, and but I wouldn't want to end it without one question. And again, I told you at the beginning that I might be asking questions from the layman's perspective. So my question is, we're talking obviously about something that is, let's call it technical in nature. So there's some engineering, there's some interesting, really cool stuff that appeals to a lot of people who are in the tech space, right? However, when I think of digital currencies. What does this mean for like the average run of the mill, let's say the housewife, the student, the professional, someone who might not be so intrinsically knowledgeable about the tech component? But what does this mean for average run of the mill everyday people like me?
Absolutely. I think, people, let's say, a lot of people these days have 401ks, right? These kind of investment managers, let's say, hedge funds, other kind of investment managers, any large institutional trading firm, they're the ones that are probably gonna, let's say the Schwabs out there, whatever, they're the ones that are gonna take the kind of, the money that you have, they're gonna invest it for you. And likely you'll see that they're going to start investing in these different avenues, right, to kind of hedge inflation and to build a strong return. So pretty interesting what we'll see pretty soon.
All right. Let's see what I'm missing. Okay, I was. And for those of you who are watching, you can learn more about Kevin and his work and his experience right there on the ticker at the bottom. It's favorai.com. Make sure you visit it and interact with. That's where you can also interact with him. And of course, if you want to connect with him on LinkedIn, you can do that right here, LinkedIn/in/K Monair. So that's on LinkedIn. And then needless to say, last but not least, the show was sponsored by Logigear, Success Delivered. So with that being said, again, thank you so much, Kevin, Wade, as ever. Just a quick announcement. Well, it's really not, it's kind of like, again, a work in progress because we're going to be having several guests next week. I'm still working on the topics and pretty much everything else that we display publicly, but you can likely by the end of the day today or early Monday morning, you can find the calendar right there on upcoming on the Tech Leaders Unplugged website. So it's right there. Just go to upcoming and you'll see what's coming. And we're going to have a bunch of guests with very interesting topics, all things tech, right here on Tech Leaders Unplugged. With that being said, join us next week right here at 9:30 weekdays and be here or be square. Thank you so much. Thank you, Kevin. Thank you, Wade. See you next time. Thank you.
All right.